Trading Market Technicals morning call video for Friday, December the 6th. Dow Jones ticket on a chin yesterday. Dow down 68. NASDAQ down about 5. S&P down almost 8 points. And the Russell actually up $1. That's interesting. Good gauge of risk. Shows that the Russell really didn't move. But Russell did move lower. Much lower than the other 5 indexes the last 3 days, 4 days that we had this little sell-off. But if you can see, here's a 10-minute chart of the spiders. Really not much has happened here. We actually gapped a little bit lower, but we stayed basically within our 15-minute range. With a little bit of selling at the end of the day. Very, very quiet. Looking at a lot of stocks. Handful of stocks were moving up and or down, but pretty much most of the stocks were consolidating, waiting for the non-farm payroll numbers to come out today. 8:30 it's due. Going to be interesting to see which way this market does move. Yesterday, we had some good economic data yesterday. Markets sold off. We were up about 3-4 handles in the pre-market around 8:30, and then the markets gave it all back and then some. That was the fourth day, actually the 5 out of 4 days that we were down. But you know, I'm looking at the pullback. It's very, very shallow, low volume. So that tells me that we could be headed back up for at least a test of the highs. Now, non-farm payrolls will trump the charts, guys. Okay, this is no question about it. It's a very big number. It's a number before Mr. Bernanke ends his tenure. So we just got to kind of take a step back here. Let's really see what happens here. Let's let the numbers, let's digest, let's see what the big guys are going to do, and then let's just follow that trend for the day. I mentioned the other day about seasonality. December is the strongest month of the year. It's the best time to buy stocks. I still think that's going to hold true. I would love to see a sell-off anywhere from 5 to 10%, and 5% is a gimme. 10% would be great. It's not going to happen. I don't see it happening. I'm not saying that it can't, but I just don't see something like this happening at the end of the year. Now, if obviously something really comes out and something real bad happens, then I would say that then we can have some sort of a trickling effect where everybody starts taking profits to lock it in at least before the end of the year. That can happen. But I'm really skeptical here because every time this market rolls over, there's tons of people looking to buy this market. And looking to price this thing in. So we'll see what happens here. I have a small video today because I want to see what happens with non-farm payrolls. Not much has changed. So I just want to run through some of these sector charts here just to show you what's going on. Here's the E-mini S&P. Now we're up about 675.7 handles here. That's pretty impressive. We had some European numbers come out and they kind of popped in our S&P up a little bit higher here. But remember now, we're at 2 extensions. We are still overextended. We are overbought. Again, not a sell signal to go out and short the market. This is just a word of caution here that we are very extended from the October 9th lows. So I would be looking for caution here. But if you look at this, what happened? We are just basically flagging, right? I mean, here, flag, flag. I mean, this is pattern recognition, guys. This is very easy. So we have 3 flags and we pushed higher. 1, 2, and now the third. To go test the highs here at 1812 is really not that far out of being realistic here, actually, 1790 here. We're only, 20 points or so away. We can get that today, tomorrow, today, Monday or Tuesday. But again, we are definitely stretched, but the averages are actually all in sync here. We got bullish formations in our 8, 20, 50, and 200. So there's nothing wrong with this chart at all, other than the fact that it could use a little bit of a breather. But again, 1, 2, 3. We had a little bit of a pause, 4, and then another pause, 5. 4 out of the 5 days. Yeah, you know what? It's not that. It wasn't too impressed on the downside to say that there was fear in this selling because it really was not. That's why I'm a little skeptic about real big massive sell-off. Okay. We had this is the number I'm watching here, guys, 1774 in the ES. I'm watching this number, and it hit it right to the penny here last Wednesday. So 1774, we roll back up again. Here's another little area of resistance, 1797 to 1800, that round lot number. And then, of course, the all-time highs would be another area of resistance. But below that, the next area, really, what I have is somewhere around 1750, 1752, and then 1741, 1740-ish area. And then a little cluster down this area here, but that's a long way out. So just keep an eye on those levels here, 1774, and then of course at 97, 1800 for either break up and or a breakdown here. That's the hourly chart of the ES. Spiders here doing its thing. We rolled over a little bit, but we're still hugging on that 20. So this is kind of a do or die situation here. Either the spider is going to break back up to the upside, test the highs, or at least my thing would be, which would be ideal, to get this market to come into this little horizontal slanted support area, which would at that time, if the price does get down there, would test that 50-day moving average. So that would be an ideal spot for at least a market test to the downside. Okay. Diamond, same thing here. As you can see, Diamond's really sold off a little bit more. But why? Obviously, it rallied. I mean, the Dow Jones really was no looking back from October 9th. So now that is coming into some selling pressure. But again, look at the Bollinger Bands are starting to tighten a little bit here. So just keep an eye on this. I do think that we should have a little bit of consolidation and then maybe another big push to the upside. Okay, and here's the IYT, the transports. Now the transports are holding up well despite oil. Oil has been on fire for the last 3 to 4 days, and it is holding up very well, sitting on its 20-day moving average, as you can see here. So watch here. Another good sector to be looking at is the transport. See what it does, because if it starts to break down and break down hard, it should take a lot of these other sectors, at least the S&P lower and the Dow lower as well. And or if the transports rally, then it would be the same to the upside. Now here's the IWM. Held again at its 20-day moving average. As you can see, pattern recognition on all of these sector charts. We're sitting here at the 20. So this is going to be kind of a do or die break here, break lower or break to the upside in these markets because of the fact that we are sitting in these areas of support. And now, again, remember, news will trump the charts for a short period, a very, very short period of time, and then the markets would, the charts will realign itself and then go back to originally what was going on in that chart itself. So here's the XLF, the banks. I love the banks here, guys. I think the banks need a little bit more of a pullback. So I'm really looking for, a deeper downside correction in the banks. Banks were on fire. They had some really good movement to the upside. I still think the banks are a buy. I'm just not crazy about buying the banks here at these areas here. Now, as you can see, we had Goldman come up, tagged our target of 170, and now is rolling over. So let's see what Goldman does. Remember, we don't want to catch a falling knife either, right? I mean, we had a nice movement in the banks for about 2 weeks, and almost virtually vertical. I'll show you J.P. Morgan. But as the market comes in, you don't want to be buying it as the market comes in. We want the market to catch some sort of a support, stabilize, and break that support to run back up again, right? We don't want to just say, okay, now it's in this area, I'm going to buy it. Let's just wait and see what happens here. Anything could change. So here's J.P. Morgan catching that 20. Here's the spot that I'm looking at, J.P. Morgan. I'm looking at this area here, this little spot of this gap area of support. I'm looking to see if it's going to hold this area here, because if it does hold and it can base a little bit and then break out back to the upside, then I'm going to take a look at J.P. Morgan for the long side here. J.P. Morgan is one of my best banks that I'm looking for. Really, tech doing nothing here aside from Apple. Here's the IGN. Apple really just on fire here, just really exploded to the upside. This is up another 6 points on a China mobile deal. But to be honest, the China mobile deal really has not happened yet. Getting close, but hasn't happened. So if you are long, tighten up stops. What we obviously the main thing is buy the rumor, sell the news. So I would be real cautious here. Definitely Apple on pullbacks I wouldn't mind buying, but I wouldn't be buying Apple up at these areas here. The thing is basically vertical for the last 6 days. And lastly is the Qs, as you can see here. Okay. All right, guys, be careful today. Remember, non-farm payroll is at 8:30. Let's see what it does. I think it would probably dictate the trend for the day and probably for the month. So let's just see what happens here. And take it one step at a time. Have a great day trading and have a great and relaxing weekend. And we will be back with a full report on Monday. Take care.